Hello, hello, hello. Good to be back. Good to be back. How are we doing, everyone? If I could get a quick mic check and audio check, make sure we're all seeing the E-mini S&P. Papa Vlad, hey brother, what's going on? Ahmed, Christmas came early. Haha, good to be back. Yeah, good to be back, Ahmed. Hope you're having a great holiday season. Figured I'd get on here with you guys for a little bit, sort out some price action as usual. Share with you guys some insight as to what I'm doing, why I'm doing it, and cover some details there. So I hope everyone's having a good holiday season. It is good to be back. I've been missing you guys quite a bit. I've went from live streaming every week, multiple times a week, to taking it easy, not concerning myself with this price action in here. So we'll get into all this. We'll sort it out. I'll show you guys where there's opportunities, where there's obstacles, and share with you guys again why I'm doing what it is I'm doing. All right, everything's clear. Awesome. Leo. Joe, hello, hello. Glad to have you, Joe. Matthew Davis, hey Dylan, when do you get the email that you passed the combine from Top Step? I just did the math. Usually at the end of the business day, once the settlement hits, they'll do the numbers, and I think they should get back to you with an email. I don't know though. If you do have a question on any particular, I would reach out to Top Step support. They're pretty good there. Market Madness, thank you very much. Ahmed, thank you. James, Harry, hello, hello. Thank you guys very much. Awesome. Megan, Leo, hello. AB, howdy, my man. Thanks for the stream. Absolutely. Good to get back on here, hang out with you guys, and get back on the saddle, as they say. Joe, what's going on, brother? Glad to have you. Awesome, guys. Looks like we got a pretty full house in here, about 60 people. Awesome. All right, so we'll go ahead and get into it. So we're looking at the E-mini S&P daily chart. Good to have everybody here again. And if you guys could please hit that like button, that helps us out here greatly. I know quite a few of you guys just hang out here, get the value, and you don't give me the like button. What's going on there? Help a brother out, all right? So yeah, please do hit that like button. Give us a comment if you're finding some value from what it is I'm offering here. Matthew Davis, Dylan, I'm coming to Florida this spring. Would love to say hi. Absolutely. What part of Florida are you going to, Matthew? All right, so let's get up to a weekly chart. Let's go ahead and look at E-mini S&P, cover some things where we left off, and where we're at today. All right, so let me get this on the daily chart. Let's take this off the weekly chart. Just getting myself calibrated again, not in the saddle as much as I have been, but still, price action is still doing the same things. So we'll go ahead and get into that, cover some points here. So let's just recap this year, everything we looked at, what we're seeing now as a result. So in the beginning of the year, we called the move higher. You guys know we were bullish for this quarterly shift higher into the buy side, and then this inefficiency here. And then more specifically on the NQ, we'll go to the continuous contract. We were more specifically bullish for the liquidity and a premium here. Just premium the discount this high, this low, and then that was our target attacking these highs here. And then we see the rotation lower into a short-term discount, and then we're getting the rally back up above this year's high. So with that, we'll go back to E-mini S&P. Yeah, see. Hey, Olawale, what's going on? Anita, hello, hello. Joe, great to have you back. Glad to be here. Glad to be here. So again, we looked at this quarterly shift bullish here, and then you guys remember I took everyone's attention lower once we priced these objectives, and then we broke down. But before we even broke down, we were already anticipating this shift. So I'm going to do a bit of a deep dive with you guys here today to show you guys some higher time frame concepts, data ranges, market structure, and how I'm qualifying all these things. How am I able to anticipate these setups ahead of time? You guys were used to me again just coming out here on Sundays, calling the market. Sometimes I would elaborate on what it is I'm looking at, but I'm gonna pull the curtain back for you guys today and let you see a little bit behind the scenes, what's really going on, how market makers really operate. So let's go ahead and sort all that out. We'll look at that on a daily chart. And then again, just covering the rotation lower here below these lows. And then we got the reversal after trading down into a discount. So let's drop down to the daily chart. Let's go ahead and sort this out. So one of the things I want to touch on that I want to really be one of the emphasis of this streams is how whenever I'm teaching, whenever I'm training, I preach a very systematic way of going about training. What's better than to lead by example? We do things here for a very specific reason, and not just because we have time to trade in front of the charts. That is the classic retail Rick, blowing my account, never finding consistency, is trading just because there's time in the day to be trading. You have to trade when it's smart to do so, when the market's going to be predisposed to run in your favor. So one thing I posted on Twitter, and I'm not sure if that made its way to Telegram or not, but it was a comment I had made about I never dreamed this level of precision was possible in the markets, especially when I first started. I never would have thought that these markets could be this predictable to the point to where we can call each of these turning points, have a prognostication for when consolidation is going to come into the market. Because again, this is where accounts get blown. You're not blowing your accounts in directional moves, or at least you shouldn't be. This is what starts every single blown account, is this right here. So with my influence, I'm being a good steward with it. I'm telling you guys before we even got into this, what I say before we left off. We're bullish. I called higher targets from down here. We'll get into all those details. Called it higher above these highs and then here. And then the last target on Telegram that I shared was this volume imbalance. So we're still having targets hit. You can see where it's going, Dylan. Well, why aren't you trading it? I'm going to go into the intraday price delivery on these days here. I'm going to show you guys what a 5 and a 1 minute chart looks like on these days. The market profile that we're in is high resistance in nature. So if I know it's high resistance, if I know there's going to be much more difficulty, my probability is going to be reduced. Why would I get on in front of the charts and risk capital? Why would I get on here in front of you guys and live stream in these days? Again, I would look like everybody else, leading my community to the slaughterhouse, but that's not what I'm doing. I'm forecasting that it's going to be difficult. So I told you guys it was going to be difficult. I still gave you guys a gun to my head opinion, which is the buy stops here. And I'll cover all that, how I use the data ranges, how I use market structure to understand all these things. So we'll cover that. But what I want to stress here is the importance of understanding when you should be trading and when you should not be trading. Again, if I was trading in here, if I was live streaming, if I was calling targets day to day like I have been doing the entire year, you guys wouldn't hold me in the same regard as you guys do, because you know when I'm talking, it's salient. The market's running. If I were to do that in here when I understand the market's not predisposed to do that, again, my results would look like everybody else's. So for those of you guys that did trade, for those of you guys that have been pushing it hard these past few weeks, what are your results? How has it been? Has it been something that's been fruitful? Has it been a good investment of your time and your mental capital? If you're an experienced trader, absolutely. There's setups, there's profitability, and again, we'll touch on those things. But as a newer trader, what you're really doing, if you're trying to navigate this with no experience, you're going to get chopped up. You're going to build fear, anxiety when you're in front of the charts, because what you're expecting to work on cleaner days, you're going to remember the times you got stopped out trading this slop in here. And it's not really slop. There's a methodology to it. It's just simple price delivery. Markets don't always just expand. They expand, retrace, consolidate, and reverse. So right here, we're in consolidation. And again, we expected that. So let's go ahead and we'll look at a macro perspective. And then I'll share with you guys how we knew these turning points here, do a little bit of deep dive. And I know there's quite a few new people here. So I know this can absolutely look like hindsight and form fitting this to look perfect after it's already occurred. But what I would counsel you to do is go back through my YouTube. Everything is still there. Every single live stream. The days I got it right, the days I had to readjust and shift. And what I want you guys to do is don't just take my word for it that we called all these things. Go back through the live streams. Everything is there. The logic, the reversals, the turning points, the targets, everything is there. Nothing's been deleted. And again, I'm going to open the curtains so that you guys can see what's really going on and how I'm really able to do this. Joe Mahadeo, no, got chopped. Absolutely. That's understandable, Joe. And I would have as well. You know, if I would be trading in these days, I know my strike rate would be lower. So if I know my strike rate would be lower, I know I'm pushing size behind the markets. I'm not just looking to trade, a couple contracts. We're looking to push size. I'm looking to take down sizable moves out of these markets. So if I know my strike rate is going to be lower, why would I be in here pushing it, live streaming in front of you guys, falling on my face? It doesn't make sense. So what I do is I lead by example. I tell you guys, we kill it every single day outside of these months. But when it presents difficult conditions, I'm going to let you guys know it's going to manifest. I lost my funded account in these days. That's to be expected. That's to be expected. And not kicking dirt in anyone's face. It's just good to reflect on it. This is how I learned. I understood that these were the conditions that would breed blown accounts. When I would get frustrated. When I would have to take several steps back. This is what isn't really taught because it's not flashy. I'm not selling, 500 spots for a course teaching you guys low probability days. But if you want to learn the really real shit, what's actually going to make you profitable, what's going to keep you profitable, because I'm sure all you guys can make money. We can all find profitable setups. We can all find winning trades. But it's all the dumb shit we do in between that loses us all that money. And I say that with a smile on my face because I've been there. I understand where many of you guys are at, trying to make a lot of money, trying to, get bills paid, whatever your situation is. I've been there. But I understand that these markets, these conditions aren't conducive to making money. So that's why I teach in that way. Yeah, Jonathan, love it, Dylan. Anyway, can we move the webcam? Yeah, let me go ahead and get that out of the way. Let's go ahead and keep that on the left. And you know what? Yeah, let me get that out of the way. Awesome. Appreciate it, Jonathan. So again, just wanted to recap on all those points because again, those are the salient points. That's what a mentor is going to teach you. They're going to let you know it's going to be difficult conditions. They're going to let you know when it's going to be hard. When's it going to be easy? Every other week, I'm calling the markets, telling you guys where it's going. When I'm live streaming, calling everything, every single fluctuation on a 1 minute candle. That's when it's going to be easy. If I were to try to do that in here, again, I would not look like the professional that you guys see me as. So let's go ahead and look back. I'm going to show you guys some things about if the data ranges, how I look at this on a higher time frame. And this is also for you, Sal, my man. Wanted to cover this because this is what we would have been learning in this month's teaching if we hadn't taken that break ahead of getting back to work here in this new year. So I'm going to teach you some things, show you guys some things about the higher time frame, how we understand these turning points are going to happen, and teach you guys a little bit about quarterly shifts. ICT does a good job of teaching quarterly shifts in his core content. I think it's month 5. He starts teaching that. But what I did notice is there's a lot of ambiguity, a lot of different ways that he's looking at it, and a lot of just different information. So what I'm going to go ahead and show you guys is how I use it. I have a very simplified, streamlined approach to understanding it. And this is, again, what works for me and delivers results that me and my team use. All right, and then the last point is, so to be able to call out these targets, if you guys remember when we were here, remember what I told you guys about the order block. We'd use that as support, trade into the buy side here and into these equal highs. So from all the way back here, I think it was one of the last live streams I did. I told you guys we were still seeing bullishness and this market's going to keep expanding higher. Again, I'm going to show you guys why we knew that and how I was able to anticipate that ahead of time. And then, yeah, so those 2 points. I was able to call out targets to you guys, this buy side here, these equal highs where the trailed stops are, and then this inefficiency here. So I'm able to call out targets, but I was also able to give you guys the prognostication that this would be a much more difficult trading environment. So to me, that's a win in my analysis. I'm hitting targets, showing that, again, the algorithm's not going to sleep. It's not taking a day off, but it's going to be more difficult. So I'm going to avoid that. And again, I'm going to be a good steward with this influence I have and lead you guys in the right direction. So to me, that's a win in my analysis for December. December was lovely. And then I'm doing things outside of trading, enjoying my life, which all you guys should be doing as well. So with that, let's go ahead and get into the business here. So we'll look at the first quarterly shift. You guys do remember, again, we called it higher. It's all there on YouTube for you guys to refer to. Hey, Rich, what's going on, brother? Glad to have you. All right, so we're going to look at quarterly shifts. So how do I look at quarterly shifts and how do I calibrate the cast forward and look back? Very simple, very straightforward. I'm going to the first day the market structure shift occurs. So here we have this shift in market structure here for this quarter. We're in consolidation. We leave the consolidation here. Once that consolidation is left, I know that's a green light that the algorithm is leaving consolidation and we're going into expansion and the market's going to be moving. So this is also what? A shift in market structure on a daily chart. So that is what? A quarterly shift. So if this is the day the market structure occurred here, the 19th of May, what I'm going to do is I'm going to go to the first day of that month, which would be what? May 1st right here. We were bullish, looking for higher prices, right? Because at the same time, dollar was bearish. So lower dollar, higher ES. All these things, again, flow together. So you need to qualify all these things with other factors. But again, I'm giving you guys a behind the scenes view of how I'm able to forecast these things. So you guys know we look 20, 40, 60 days back. I'm not going to put the line because that'd be a bit time consuming, but you have to look back. That's the liquidity the market's going to seek. So just doing a quick look back here. Here's 60 days. So within that, the highest high is here and here. We ran for that. But what do you do if it's taken the liquidity in the last 60 days? You have to go further out and look further to the left on a higher time frame chart, which would be a weekly chart here and then these levels here. So again, that's why I was using those levels. That's outside of the 60 days. So let's drop down to that daily chart. We'll go back to it, back to this line here. And now we use the cast forward. What does the cast forward do? What does that tell me? It tells me when these markets are going to turn and why. Remember what I covered here with NASDAQ? What was it reaching for? These equal highs in here. So remember, it's not just price, it's time and price. I see a lot of chatter on Twitter, just to touch on that real quick, about is time even, should it even be considered, or is it just price, or whatever. And you know, we just humbly laugh here in our corner while they're debating nonsense. It's time first, then price. So NASDAQ's doing what? It's reaching higher for these stops here. At the same time, we're seeing ES is going to want to reprice into this volume imbalance in here, and then this inefficient delivery. So dropping back down into the daily chart, I showed you guys how we got this level. Where does the quarterly shift occur here? Here, we shift market structure there. So you go back to the first of the month. That's how you calibrate it. If there is indeed an algorithm, if it is controlling price, it's going to have to seek and index information. Well, what reference points is the algorithm going to refer to? 20, 40, 60 days back, 20, 40, 60 days forward. Once you understand that, you're knowing where the algorithm is going to seek and index that information from, that it's going to be referring to, the real algorithm that delivers price. So what I'm going to go ahead and do is I'm going to cast forward 60 days from this shift in market structure, and I'm going to anticipate, not guess, when we're going to see that next quarterly shift. So we're going to move it 60 days forward. And we're going to put a line right here on 60 days forward. So what I want to ask you guys, especially for the folks that don't understand that there is a control mechanism behind these markets. Do you think it's random that from this quarterly shift here, it's a perfect 60-day cast forward right into this high? And this is what makes the high. Rounds out right here at 60 days forward. Because these examples I'm about to show you are perfect, and this is, Luke, what does time first mean? It means you have to consider the timing element as a first operating procedure before you even consider price. What makes a PD array effective? What makes a fair value gap, an order block, or liquidity effective? Time. There has to be a time for the market to want to move. That applies to intraday, but I'm also showing you how it applies to the higher time frame. So looking at this here, we cast forward 60 days. We know every 3 to 4 months, sometimes 2 months, depending on if we get to those levels sooner, there's going to be a shift in market structure on that daily chart that's going to turn the entire tide of the market for another 3 to 4 months. So looking at this here again, the 60-day, we cast forward 60 days. So as we're getting into these targets, remember time and price now, this is where this comes together. It has to dovetail together in your analysis. So looking at this here, NASDAQ's doing what? It's reaching for the buy stops. ES is what? It's reaching higher for the inefficiency. So there's price here. But what time is it going to do that? That's what I'm showing you. We cast 60 days forward. Again, this is a perfect example. So don't always be fooled and think it's going to be exactly on the 60th day like I'm showing you here. The stock indices are an extremely precise, professional market. So it's going to have these characteristics. That's why I trade it. That's why I don't really like to mess around in Forex too much. I can still call it. I can throttle it. But it's not something I prefer to do, especially when you can trade something as beautiful as stock indices. So that 60-day look forward, I'm already going to anticipate that at this time here, there's going to be a shift, especially because time is in alignment with price. We've reached those levels. So remember what I was telling you guys here. Before we even broke down and shifted market structure, we were already looking at, let me go ahead and take this off, this SMT here. So as ES made this higher high here, ES was just running out the stops, whereas the NQ did not make a higher high there. So when I'm qualifying SMT to you guys, when I'm qualifying where these shifts are occurring, this is everything that's going into it. And I'll get to all your guys' questions in a moment. I see that filling up, but I got to stay focused. If not, I'll be all over the place. And I'll get to your questions. So we look 60 days forward. At that 60 days, what's one thing I always preach to you guys? Once we have higher time frame targets hit, once we do a nice range expansion and we get targets delivered, what stance do I take? Patience. I take a step back. I let the market show me what it's going to do. Because I understand every 3 to 4 months, there's new opportunity. There's fresh bread every 3 to 4 months on these time frames. Absolutely. So when we get to those times and we reach objectives, we're around that 60-day cast forward. I'm patient. I'm going to let the market show its hand. And then here we see a showing of the hand. We see SMT here. So ES makes a higher high, NASDAQ does not. So what's occurring here? ES is running the stops. NASDAQ's already it's under accumulation. It's already booked enough shorts to where it's not going to make that higher high and run those stops. So let's go and take that off. So SMT is just another confirmation that I would look for then. So if you go back through my YouTube video, how was I able to call this shift down to this inefficiency, this sell side here and here, and then eventually all the way down here using this? Well, now we're going to cast another 60 days forward, right? Because this is where the next shift in structure occurred. So it's a rolling 60 days you have to consider. For those of you guys that are newer, this is probably a little advanced for you, but no worries. Keep spending time with the material and the content, and you'll be looking like me on Sundays in no time. So this is where the shift occurs here in August. So again, the same logic. We go to the first day of the month, which is right here, August 1st. So I'm putting my vertical line here. The algorithm is going to look for liquidity and inefficiency 60 days back and 60 days forward. So from here, let's cast 60 days back. We do want to cast 20, 40, and then 60. So I'm going to go ahead and put my vertical line here on 60 days. So Dylan, out of all these lows in here, why that one? Why were you targeting that one when we were short all these months? Look at the look back. From the shift in market structure, this is the new quarterly shift. So that's the new direction the market's going to take the next 3 to 4 months. So why was I calling this market lower? Why was each retracement here a new shorting opportunity? Each retracement here was a new shorting opportunity. And again, it's all there, folks. Just go look at it. I don't delete it. Why was I taking our attention to this specific low? Remember I told you guys about the market maker sell model and how once we hit these objectives, my quarterly shift targets were met. So what am I doing? I'm taking a pause. I'm taking a step back. I'm going to let that next obvious run show itself. So again, 60 days back. So I'm looking at all the liquidity and inefficiency and PD arrays that are within the 60-day look back. Remember, I took our attention here, 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 and these equal lows in here, and then finally down here. And then look at the randomness here. 60 days forward perfectly gives us this date here. So the algorithm is only going to pull information from these 60 days, and it's going to refer to those, and they're going to be more sensitive. So why is it that the highs I'm calling always get hit? Why the lows that I'm looking at are always the ones that are delivered? Because again, there's a lot more that has to be considered. So I'm looking at this specific low here. So this is where the real magic comes in. I'll go ahead and show you guys something else. So we look back, this is the low I'm looking at. All these lows throughout here, that's our targets. We're selling short, and we're riding this thing lower for the entire quarter until we get to here. And I'm telling you guys, this is where we're distributed. Or not we, again, not financial advice. You guys read the disclaimer. And please read that disclaimer. Actually, I had to invest quite a bit of money to get that. So looking at the quarterly shift, we look back 60 days. So the algorithm is going to refer to this reference point right here specifically. So is it an accident that we're on point with all these swing lows and swing highs? Because now let's do a cast forward. So when am I going to expect to round out this new quarterly shift? Well, again, it's the same consistent logic. It's not a mystery. So we cast it 60 days forward. So we were, again, 2 days off. So again, this isn't a magic bullet or anything. It's not going to be exactly on the 60th day. It's always a reversal. So don't get it confused like that. Around that 60th day, even the 40th day, there's going to be some type of shift. The logic is consistent. The first day where the quarterly shift occurs, cast forward 60 days. I'm going to go ahead and put a vertical line on that. And then within the next day, it reprices down into that low. So look at the precision as to when I'm expecting these targets to get hit, why I'm looking at these specific targets here. Why, as we're short, I'm telling you guys, I'm distributing down here. This is my profit taking. We short premiums, and then we buy back in the discounts. So that's why that specific level was targeted. And then again, what do I tell you guys after we have quarterly shift targets hit? Taking a step back. I'm just going to let that obvious move show itself. So now let's go ahead and look forward to this new quarterly shift. So again, the logic remains consistent. We see what? We hit the levels here. So we clear the liquidity, all the open float. Why is it referring to these levels here, 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 and here? What's there that the market's reaching for? There's fund level liquidity. Remember, these central banks, these smart money entities, they're not after retail RICS 3 contracts. They're after large funds that are trading millions of dollars. They have stop losses that are millions of dollars in orders, billions that they're managing. So they're putting much bigger risk behind their trades. And that's who smart money's after. That's why these things work. Because that smart money entity, that liquidity provider, is cannibalizing that entity of trader, which is the large funds. So that's why this works. Well, how'd you know these highs here? Where's the fund level stops? How do they trade? They trade with long-term trend following models. So they're going to have stops here. They're going to have stops here. So why was I confident we were going to rip into that? Why was I trading on Friday? Why was I going long this day into these equal highs here and here? Because there's fund level liquidity there that the market's going to reprice into. So you see how all this just forms a beautiful tapestry. Everything's clean, everything makes sense. We understand the why behind everything, and we're never confused. We're anticipating all these things. So again, let's look at the logic. 60 days forward is around here. So around here, remember, time and price. Time is 60 days. Price is what? The end of the market maker sell model here. Time and price comes into alignment. So what am I going to be waiting for? The next quarterly shift. So what are we going to do? We're going to look at, where does the quarterly shift occur? Right here. This is an intermediate term high. I'll teach more on market structure. Not going to get too much into this because obviously, this is really just the free stuff. So, it's just bits and pieces of it. If you guys really want to learn this, you guys know where to go. Again, you have to learn this, seeing it consistently day in and day out. But again, this is something to get you guys started. So again, back to the quarterly shift. How do we calibrate that? Well, where does the quarterly shift start? Right here. We break market structure. Not shift market structure, we break market structure. Distinction there. Market structure is broken. So again, the logic is consistent. Where do we calibrate the cast forward and look back on the first day of the month? So we go right here to November 1st. And you guys remember me doing this. I did this for you guys on YouTube. This is why this was my target here. This was my target here. Let's look at the logic. What do? We cast 20. 20. So what's within the 20? This buy side here. We cast 40. Buy side here. And then ultimately we cast back 60 days, which is right here. So I'm going to go ahead and put a vertical line on that. So you want to look at the highest high and the lowest low within 60 days or in close proximity. So why was that 46.11 level right here? Why was that so significant in my analysis these past few weeks? Why was I confidently calling this market higher, telling you guys we're going to keep rallying? All these things start to come together. So we have this buy side here and we have these relative equal highs. So again, there's fund level stops there. That's too juicy. That's too enticing. They're going to want to reprice it up into there. So again, we have these equal highs here. Market takes that. That's why I'm calling these levels. That's why my targets are the ones that are getting hit. Above this buy side, remember what else I called? This volume imbalance. And then that was really my last target of interest on the upside for E-mini S&P. Again, considering the months and the market conditions that we're trading in. So if I'm expecting the liquidity here, here, and here, there's what's called open float there. What is the open float? Open float is the open pending orders in the marketplace at these key levels. So there's liquidity there, here, and here. So there's fund level traders, just to recap, with their stops there that are trying to capture the huge move lower. Ahmed Diaz, hope hedge fund managers do not find your channel. Yeah, maybe, you know, what's the average lifespan of a hedge fund? I think it's 7 years. So the big dogs in the industry, the hedge funds, which again, they don't know anything. Their average lifespan is 7 years in the marketplace. Why? Because of what I'm teaching you here. They're the ones getting cannibalized every single week in these markets. So again, their stop is here, the open float that exists there. So that's why every 3 to 4 months, smart money's going to change the tide of the marketplace to run back on that liquidity that's there. Because smart money's buying the discount. Remember when I took your guys' attention to this fair value gap here in breaker? Going back to NQ. Remember I called this as a breaker here before we even traded up to it. And I told you guys that if we are going to run for these equal highs here and here, this breaker is going to be used as support before we even got there. How do I know that? Because I know this algorithm like the back of my hand. If it's going to run higher for these highs here, it's going to use the specific PD arrays that we look for as support. So here we have a fair value gap here and a breaker. I took your guys' attention as to why that would be support before we even got there. How do I know that? How do you know it's going to be an inversion? Going back to E-mini S&P. Here. Remember, I qualified this to you guys as a, excuse me, inversion fair value gap. I told you guys this would be a breaker. This would be a bullish order block. We'd use that as support. I said for me to remain bullish on this market, we should not get below this bullish order block here, this last down close. What do? We trade down into it, rally. Remember this fair value gap? Go back, it's there. It's all in there. I called that inversion. So look at how we open. We drop lower. You see how we touch consequent encroachment or the midpoint perfectly? There's no randomness to this at all. We hit that, expand higher. For what? The buy stops above here. Let me go ahead and pop open Telegram. Can I do that, Abraham? Can I pop open Telegram? Is that gonna affect anything? It shouldn't. Let's go ahead and give it a whirl here. All right. Let me see. Hope I'm not doing anything to mess up the stream. All right, can you guys see Telegram? Just want to make sure we're on the same page here because I'm starting to look at it and say, this is going to look like hindsight. But let's go ahead and squash that right away. So if you guys can see Telegram, let me know. Just make sure I didn't mess anything up here on the stream. It's good? Awesome. Appreciate it, Abraham. All right, so let's go and take a look at this. Why am I calling this out on Telegram? Why am I telling my community the market is going to run for these highs here, here, and then I noted this level here? Because that's what the algorithm is going to reprice into. Lael, Photoshop, bro. Man, you guys are funny. All right, so why am I taking your attention here? Because that's what the algorithm is going to reprice into. But again, I don't just give you guys ambiguous targets. I don't just say we're going here. I give you guys specifics. What's the algorithm going to key off of? What I give you guys as a reference point, this bullish order block, and then this inversion fair value gap. Again, I'm not annotating these things for no reason. If it's on a chart, it's because the market's going to use that and nothing else. So with that, let's go ahead and go back to E-mini S&P. So this is that same inversion fair value gap here I took everyone's attention to. Before that, though, let's look at the order block, one thing at a time. So again, you guys are starting to see behind the curtain. Why am I calling these targets? Why am I using specific arrays as support to send us into those targets? There's levels to this. And again, this is just a brief introduction. If you really want to learn how to do that, you guys know where to go. So let's take a look at this here. Down close candle, that's our bullish order block here. Again, as I labeled right here, bullish order block. So what are the sensitive points on a bullish order block? Well, we look at the opening price here. and then we look at the midpoint. So as I'm watching price all these days, not trading it because I don't care to trade this. There's much better days I can trade and take down my winning trades. So we extend that mean threshold through. Look at the sensitivity there. Tags it once, stops perfectly. Twice, 3 times, touches it perfectly here. But look at what the bodies are doing. The bodies are all respecting it. The wicks are touching it. It's offering the market there. Why? That smart money entity that many don't believe exists is using these levels to buy, just like I'm telling you it's going to do. Again, I'm not marking these levels on here for my own health. I'm doing it because the algorithm is going to refer to it and use it as a launch pad to send it into the levels, just like I've been calling it all year long, every week, baby. So looking at the order block, the sensitivity there, calling it as a real institutional support level. Isn't that how we all expected our retail support and resistance to work? I bought the books. I spent thousands of dollars investing in retail garbage and all the misinformation that exists. This is how I expected my support and resistance to work. I would think we would hit this high here, we'd hit it, and then we reject lower. Why? Because that's what the books told us, right? We're cannibalizing that mentality, that thought process. What makes what we do effective is because retail looks at the market like that. So I'm seeing these juicy equal highs here. I'm seeing this inversion fair value gap. Well, let's go ahead and take the order block off. Well, why'd you pick that fair value gap? And look at all the other PD arrays here. This is the fair value gap it's going to refer to because it's within the range that it's trading at. And it's also within the 60-day look back. So that's going to be a sensitive price point for the algorithm. Again, this is another concept, which is a market maker buy model. So all these things flow together seamlessly. In a market maker buy model or in a buy program, the market's doing what? Offering higher, 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 attacking what? The only 2 things the market attacks, liquidity and then efficiency. So it's reaching for the buy stops here. But if it's going to run to the buy stops, what's it's also going to look to do? Reach up into the inefficiency. So we had this one single down pass with the volume imbalance. My target. Go ahead and see if I can pull that up again. Bam. Look at the inversion fair value gap extending that through. Look at the bodies there. Tags it once, twice, 3 times perfectly right there. Boom, higher. This never gets old. Never gets old to me. Because again, this is what I put my trust and faith into early on with support and resistance, with retail logic, and none of it works. This is what the algorithm is referring to. So looking at how we find support here, there's a reason I'm taking your attention to this very specific level here. Not this one down here, not this order block down here, this level here, the inversion, and the bullish order block. And it's going to use that as support to rally up into these targets here, here, and then here. Last thing, let's go ahead and take a look at NQ real quick. So again, same thing for the NASDAQ. I know quite a few guys trade NASDAQ. It's the same thing. We have bullish order flow. We trade down to the discount. We displace higher, market structure break, fair value gap breaker. When don't you expect the discount to be traded to, Dylan? Why wouldn't you expect it to come all the way down here and then go up? The market structure is telling me we don't need to. There's also levels of market structure that, again, I get into in private training. But again, that's a bit beyond the scope of what I'm willing to teach on here. Support at the breaker perfectly. Expansion higher, down close, bullish order block, hit that, rally. So this was the trade I took on Friday. Let me go ahead and see if I can pull that up actually. So we're going to go over this trade here. So it's a 3.3%. Yeah, so almost a 3.5%, one clip, one shot. And we're going to go ahead and go into that. But everything I'm explaining here is the underpinnings for what makes those trades successful. So you have to understand how all these things, again, kind of dovetail together to make these things make sense. So again, we're seeing bullish order flow. So what does that mean? Discount arrays are going to be supported, as we're seeing here. Not expecting it to go below it, but use it as what? As support. That's why I'm taking your attention to these levels. Because the algorithm's going to use them. And then you can use them in your trading, again, if you know what you're doing. So looking at the order flow here, again, we're bullish. Discount levels are being supported. Look at all these breakaway gaps in here. Those of you guys that have been with me for a while. What does that tell us? Ooh, starts to come together. So let's look at this point here, and then we'll go ahead and get into the nitty gritty. I'll show you guys the executions and what was the basis for that. So this market's in a buy program. We're repricing higher. So any drop lower is just what? For smart money to accumulate at a deeper discount. So as NASDAQ's trading lower here, below the swing low, what exists there? Trailed stops. People that are long, what do the books tell you to do? Put the stop right below the swing low. So there's orders there. And as a smart money entity like we are, isn't it advantageous to have willing sellers at a cheap price for us to buy it and then them reprice it higher? Very simple logic. So as NASDAQ's dropping, I'm monitoring the relationship of these two averages. NASDAQ makes a lower low, clears the stops. What do we see ES do? ES fails to do so. It does not make a lower low here. And there's other confirmations in dollar and other things that told me, but again, that's just a bit beyond the scope of this YouTube channel. Just going to take that off. Okay, so as NASDAQ's dropping, it's accumulating the stops there. The fact that ES did not make a lower low tells me what? This market's under accumulation. NASDAQ was just running out the stops. It's a green light. We're going higher. So this is the day I'm trading here, Friday. So let me go ahead and put the replay tool on just so we can focus on what's salient. So why did I avoid all this here and just trade this day here? Because the market here is in accumulation phase. It's in consolidation. Consolidation is one of the most difficult market profiles to trade. Simply because it's aimless. It's not reaching for levels. It's just gravitating between premium and discount. In the lower time frame, I'll show you guys how you can trade consolidation profile, but you do want to keep in mind it is one of the lower probability trading conditions. So with what we do, are we caught off guard by consolidation, or are we expecting it ahead of time? You guys know what's up. So as we're in the consolidation, I don't want to touch this market. I don't want to risk money in it. Are there 5, 10 handle scalps? Yes, but I'm really not trying to mess around with those Mickey Mouse moves. I'm looking to take a lot more meat off the bone and take a lot bigger hauls down if I am going to be spending my time trading. And this is the underpinnings as to how I'm able to just select those high probability, low risk setups and avoid the chop that most people are doing themselves in on. So SMT here, support at all the arrays I would expect. Bam. Order block, rally. So we're going to go into this daily candle and look at the intraday. One of the first things I take all my students into when learning is you have to know that draw on liquidity. Why don't your order blocks work? Why don't your fair value gaps work? Because this is the missing element in your trading. So what's this daily candle predisposed to do? Expand higher, right? We have the buy side here and here. And you see how these are relatively equal? They traded up to it and then they pulled off it. What is that doing? That's building buy side liquidity here and here because people are seeing this as, oh, resistance is dropping lower. We're going to reach lower for a discount. Why would we short? The market's in a buy program. It's going higher to reaccumulate, or excuse me, it's going lower to reaccumulate to then go higher. So I'm trading this candle expansion higher on a daily chart. So a lot of times people can get fascinated or wowed with what I'm doing on a 5, 15, 1 minute seconds chart. But this is what makes that effective. So never lose sight of that. So people that say don't trade a 1 minute chart, you shouldn't, they have no idea what they're talking about. Price is price. If I were to take any time frame, be it a monthly chart, be it a 15-second chart, and I were to take the time and price axis off and just show you the candles, would you know what the difference between a second and a monthly chart is? No. Why? Because it's doing the same things, just on a different time interval. So again, people that are saying don't trade a 1 minute, don't trade a 5 minute, that's why you're losing, that's why they're losing. Because they don't know how to really read the markets. Once you understand how to read a daily chart, it's nothing different on a 1 minute chart. It's the same price, just again on a different time interval. Just wanted to clear up that misconception because I do get quite a few questions about that, and I just wanted to clarify that right here. So again, bullish expansion higher into here. Now let's drop down into the business. So 1 hour chart. All right, so look at this here. Am I trading or am I live streaming in this? Absolutely not. Why? Again, I've already covered that because everybody would be looking to trade this here and it's going to yield not promising results. So if I'm able to anticipate that, if I'm able to forecast this to you ahead of time, would you prefer a mentor that's going to tell you it's going to be hard and it's going to do this thing right here and avoid it? Or, well, let's squeeze out some more ad revenue and let's live stream for another week. That's what I'm trying to submit to you guys, is that there's levels to this and I'm showing you, but most importantly, I'm leading by example. So again, consolidation, how do you trade it? Well, you have to identify the range we're in. How do you identify a dealing range? Intermediate term high, intermediate term low. You want to bracket the high and the low, and you want to get an equilibrium price point. So, all right, for those of you guys that don't have the notepad out, I'm teaching you how to trade the consolidation. So pay close attention. Intermediate term low here sweeps the low. Intermediate term high here sweeps the high. So we're expecting consolidation. When does time distortion occur? Usually holiday weeks, Passover week, Thanksgiving week, when we have those bank holidays. Typically, those are the weeks that the market is going to use for time distortion. What's time distortion? It's where the market just is marking time sideways, but it's not running for anything. Or consolidation. So how am I able to anticipate that? If you didn't have your notepad out, you just missed that gem. So these are how all these things factor into my analysis and why I'm not here taking a blowtorch to my equity like many were, because we're not anticipating this. But let's say you are a professional. Let's say you are experienced. You've been doing this for a long time and you want to trade the consolidation. Can you? Absolutely. I'd rather not waste my time in it because, again, there's setups in here. I'm going to show you how to identify them and give you guys the framework for consolidation trading. But I'm not trying to waste my time on a 5-10 handle run. If that's fruitful for you, if that's an endeavor you want to take on and you want to trade that, you know, it's your prerogative. You can trade however you like. I'm just showing you guys what I do and what brings myself and my team our success. So again, low, high, the dealing range we're trading in. Intermediate term low, intermediate term high. We're not expecting that to be broken on the high or the low. Why? Because we're in consolidation until we get to a very specific time, which again here would be non-farm payroll Friday. So the beginning basis for understanding consolidations is, number one, you have to be able to anticipate it. If you're getting caught off guard by these consolidations, you're always going to fall victim to it. If you take note, if you investigate when these things are occurring, when professionals are calling and telling you it's going to consolidate, which is what I was doing. Once you get the anticipatory skill set to be able to prognosticate these consolidations, that's the first step in trading them. So before trading a consolidation, you have to know how to expect it. Because I know in my early days, again, this is when I would do damage to myself. I would see, oh, look, these equal lows here and here. It's going to short. I'm going to hold it. And then it would reverse all the way back on me and stop out. Because I didn't know what I was doing. I didn't understand the market profile I was trading in, but most importantly, how to navigate that market profile. And that's what I'm about to teach you here. Dealing range that we're trading in, high to low. In consolidation, the market's going to revert to two things: premium, discount, and equilibrium. Well, really three. Market trades down into a discount. Are we going to expect this low to be broken? Probably not. Why? Because we're in consolidation. So what's it going to do? Revert back to premium. But we're bullish on the daily chart. So if I was going long here in this day, and I was holding for here in that 46.11 level I called out, I would have gotten stopped out because it would have reversed against me. So if I know these sessions and these days are going to be more problematic, I'm looking for higher prices. We called higher prices. But again, you'd have to weather all this drawdown, all these stop outs in here, trying to call this thing higher. So am I going to put myself through that mental anguish, or am I going to enjoy life outside of trading and just come back when it's simple and easy? We trade up into a premium. So what's the market going to revert to? Discount. What do we have? Equal lows here in discount within that same range. We hit the discount. Again, we hit the high end of that daily inversion fair value gap that's about 60 days back. So remember, you have to keep these higher time frame levels understood. Levels I'm taking your attention to. Levels the algorithm's referring to. It's probably not random that this marks out the low. Right? Trade lower down to the sell stops into a discount. So again, what's the market going to do? It's going to gyrate between premium, discount, and equilibrium. We're in the deep discount, so what's it going to do? Refer to the premium. Does it? Yes. You're in a premium. What's it going to do? Drop back down into the discount until time becomes a factor. So what day is this here? Non-farm payroll Friday, when we expect volatility. So I'm going to expect this volatility injection on Friday to start moving this market around and leave this consolidation. So this is an accumulation phase on a higher time frame, and I don't want to trade that. I showed you how. I showed you how you can start to find these setups. But again, if you chase the market in this type of condition, if you try to short the discount or buy the premium, it's going to be very tough trading. And again, that's why I just preferably just avoid it myself. But it is tradable. All right, so let's look at today's, Friday's price action, and then I'll break down the trade and why I was looking for these highs here. So you note here how we trade up to that 46.11 level that I called out, stop just short and break down. This is why these types of conditions are frustrating for me, because these types of signatures manifest, and I already know they are. If I was going long this day right here, which I would have been expecting what, that 46.11 level to be tagged. So I would have what, limit orders there to get me out after buying the discount. So you see how it just stops short, leaves that liquidity and then reverses? I would have been partialed out, of course, here because it took out a previous day's high and several other factors. But what I want to share is look at the frustration, because I would have had limit orders there to get me out, and I would not have got those filled. And then I would have probably had to get stopped on the balance somewhere up here, which again isn't how I prefer to trade. I like clean, obvious days where it's just going to run through my levels, smoke them. And again, pretty much what you guys saw me do on YouTube throughout this entire year. That's the type of trading I like to do. Not this right here. Again, look at the morning session. This is why I don't typically trade the morning sessions of non-farm payroll, because there's a lot of funny business. So let's drop down into the 15-minute chart. Let's go ahead and get this sorted out. Don't want to keep you guys too long here on holiday. So, okay, this is the range we're trading in. Let me go ahead and take this off. We're bullish. So the market's dropping down into a short-term discount to do what? As soon as the 8:30 news dropped, look at how they left this liquidity here, here, and here intact. What's that doing? That's setting up retail to see resistance, and that it's going to drop lower as a result. So they give them that cookie there. Again, look at these highs here. We traded up, and then we broke down. Over here. We traded up, we hit it, and then we broke down. So retail's really short now, because, man, it's really strong resistance. Look, we hit it again and then bounced off. So retail is what? They're short. 8:30 news comes out. However, they like to look at the data. Oh, man, the non-farm report came out bad for the stock market. You know, the guys on CNBC, you know, they're squawking. They're doing all their talking. And, again, they're just leading the sheep to the slaughterhouse, which is not what I'm doing here. I'm teaching you guys how to be the apex predator in the market. But if you want to be the apex predator, you got to hunt different. You got to think different. Trade down into the discount here at 8:30. What's retail seeing? We're going short because, wow, we're really bearish. Look at all these highs. Look at all that resistance. Man, we almost have a quadruple top here. They give them that cookie. What's that doing for us as smart money? That's dropping it into a discount for more accumulation to smoke the targets I gave you guys at 46.11. But I know this can look like hindsight. I got you guys covered. We got an execution. Morning session, I don't prefer to trade non-farm payroll simply because this right here. If I was long on that morning, again, I would have limit orders at 46.11 to take me out at a profitable exit. Would it have denied me that? Absolutely. And then again, I would have had to have gotten stopped out on the balance, probably in profit with the way I manage my trades. But it's that frustrating factor there that just makes me avoid this trading condition, because I don't like to trade like that. So again, drop down into the discount. We quickly leave the discounted valuation. So from this low to this high, we trade down to the discount. A bullish signature is when the market hits discount and immediately displaces out of discount. And because the market maker's MO, they don't like to keep the market at discounted valuation for very long if we're bullish. So this is a bullish signature I look for. So let me go ahead over to the execution here. And this is the 1 minute chart. So just looking at the time where we're at, again, that's that 46.11 level we've been focused on all week. It's not a mystery. There's buy orders that are there that the algorithm's going to reprice into. Now let's consider the timing aspect. When's it going to do it? It's going to do it before the close of market hours on Friday. So I'm buying the discount, selling the premium. Why am I taking off a partial here so early and here and not just holding to here like I would do on other days? Because of the time we're trading in. It might deny me this exit here at that perfect high there. So if it does deny me that exit by taking a partial here and here, what am I doing? I'm guaranteeing a profitable trade for myself by taking partials at premium levels and trailing my stop appropriately. And then if it gets up to here, perfect. I'll distribute my last contract. You guys notice that little swing high exit there? Probably not random. I got some more things to teach you about how I did that. So there's a logic and there's levels to this. And that, again, that's what I'm articulating here. So this is the execution. Again, what I'm showing you is the underpinnings that make this execution what it is. And again, that was about a 3.3% trade on one clip. Out here like Rambo with my shotgun blaster. All right, trade higher, we trade lower off this high. What am I doing on on-farm payroll days? I'm using the morning to gather intel. I want to see what liquidity and what inefficiency they're leaving in place. Once I see that, I'm going to see how they're positioning the victims. How are they stacking the bodies? We're the ones doing the stacking. So what do they do here? They take it higher, they stop just short of that high, and then they pull it down, pull it off it. What's that doing there? What's building up here and above that old high at 46.11? More buy stops because they see it trade up. Man, now this thing is super strong resistance because it's rejecting. We're looking at this as what? It's dropping down into a discount. It's dropping down into a bullish order block. Look how we hit that opening price, bam. And then as soon as I see that signature, I'm dropping down into my 1 minute chart and I'm buying this thing. Because of these signatures. This is why my order blocks work. This is why my inversion fair value gaps, why my breakers, why they're effective. Because of everything else I'm teaching you on that daily and weekly chart. We trade lower into the discount. We hit the bullish order block opening price. Look at that. That's perfect. There's nothing better than what these concepts provide in terms of precision. Hit that opening price. What do you see? Immediate reaction higher. What's the target? Where are the victims at? Where's the liquidity? Right here. And at that 46.11 at that daily high that we look back. Remember, how did I get to that high? It's within the look back range. So the algorithm's going to refer to that high as a significant level. Let me go ahead and label that. Remember, if you guys are learning, help your man out and hit that like button. I know a lot of you guys just here watching, getting all the free value and not even helping a brother out. All right. Bullish order block in here. Just keep that in mind as we go through the time frames. Again, open 8:30 news embargo lifts. We drop lower. What's that doing? Again, retail selling that short. So there's stops building above here, here, and this high here that's on that daily chart. They trade right up to it and stop just short and then pull it back down into a discount. Again, that is building in more liquidity here. To do what? To be attacked in the afternoon. So again, I just don't prefer this delivery. Just look at what a slow grind higher this is. A lot of people that were in Telegram, people that were reaching out to me, it's like, how do you hold for that? Because it's, it's doing all this whipsaw back and forth. Again, why I don't like to trade these days or in this environment. It's boring to me. Look at how long this trade took to reach terminus. 12:30. I'm closing out my last trade at 3 o'clock. That to me is abysmal price action. Yes, I can have targets hit. Yes, I can trade it. Yes, I can find setups. But why would I want to? Especially if there's better days ahead. That's what separates me from everybody else that's just trying to get clicks and more views. I'm giving you the really real shit when you're going to do well, when you're not going to do well, but I'm telling you ahead of time. So there should be a great deal of reassurance within that you are in good hands, that you are working with a professional that knows this like the back of their hand. Drop down, hit that 15-minute bullish order block, trade down to that discount. And then what's it doing? It's setting up, that's the lunch retracement into the expansion. So look at the delivery here. Wick higher, back and forth, back and forth, back and forth. So it's just constant back and forth, give and take, give and take, give and take. If you're unexperienced, this trade here would feel like an eternity holding it. Is it 12:30 to? Hold on, how long was this trade? Yeah, it's about a 2-hour trade for that duration. On a low resistance day, on another day, that would have been there within 30 minutes. We would have already priced above these highs. Again, another reason why I don't prefer to trade these conditions. I can still, again, call targets, have it delivered, but it's just the delivery that I don't prefer. So we trade down into a discount. We're entering what? A buy program. So we run out these stops here, and then we want to look for an SMT. And then this is what sealed the deal for me to be confident we were going higher. So as, you know, it was actually YM. Wait, was it down? Oh, okay. Okay, it was NASDAQ. Okay. So ES trades down. What's here? Stops. Anyone that was long, they have their stop here. They're taken out. That's perfect. Why? Because like you and I, remember what I took everyone in my community's attention to, 46.11. Before we even traded up to this level, I called out to a gentleman in the Telegram that was asking me, what are you thinking about the PM session? Would you trade it? And I was like, just based off what I'm looking at, I like the 46.11 level. And then I would have came back about a couple hours later, and then, you know, we would joke about how random this all is. But then I was thinking, you know what, if I called the level, why not just trade it? Show them that it is tradable. The algorithm's still working. Your good pal Dylan can still call targets and trade it. But again, just also indicating why I don't like to. NASDAQ does not make a lower low here, while ES does. So there's a key SMT at a critical time when I'm already expecting this move to occur. So that SMT seals the deal for me. Once I get this displacement higher, through this swing high here, that's my shift in market structure that I need to then go long. I already know this is going to be the change in state of delivery from a sell program to buy program. Why? Narrative. Why is this breaker a good buying opportunity? Why am I buying in here? Because the narrative that it's going higher. And let me drop down into the 1-minute chart now. I'm going to touch on a few points. I think a lot of people call this like the unicorn model or something. I recognize it as my A+ setup that I taught you guys. I think it was this past year. All right. So this is what distinguishes me from every other ICT trader that doesn't understand these things. It's the price action top down. That's the secret you're looking for, is the top down analysis. I'm not just in here looking for patterns. I'm not just looking for a breaker in the fair value gap. I'm looking for that once I understand what I should be expecting as a result of the higher time frame delivery. So I'm not just in here buying random fair value gaps. That's what made me unsuccessful early on. You have to know what you're looking for and why, and have somebody be able to map it out. So as we're here, I'm calling out to a gentleman, 46.11 is the target. That's what the algorithm's going to refer to for this session. And I was like, you know what? I already did the analysis. Why not just trade it? And I come back and teach on it later and give you guys some value. Tommy, the psychology. Appreciate the reminder, brother. Psychology is huge in this. Why do I have a good psychology? Why am I not excited when I'm trading? Again, you guys saw me live trade in front of you this previous year. The psychology and the mental fortitude that I have when I'm trading is what makes me successful. It's not, I mean, the concepts are superior, but it's not the superior concepts that give me good psychology. It's because I know when to put myself in front of the markets. I know when it's going to be more predisposed to deliver how I want it to deliver. And that in turn fixes my psychology because I'm not stressed out about the next trade. The next trade's irrelevant to me. It's the next 100 through 200 trades, as I've taught you guys before. So psychology plays a big part in your trading, but everyone just says, yeah, psychology, you know, it's 80% psychology, all that. But that doesn't give you anything. Like, yeah, it's psychology, but what do you do with that? It's what I'm teaching you here and what I've been teaching throughout the entire year in layered teachings. Back to the model here. This A+ setup, breaker, fair value gap that I'm buying, here I'm buying, And then as we trade back down into this fair value gap and bullish order block in here, I'm doing more buying as we're hitting that opening price, expecting it to be support. So buying 3 contracts here and here. I'm not just looking for a pattern. The pattern only makes sense once I know what I'm looking for top down, which is again these highs here. So now all this comes into an alignment. Now I can trust my entry models. It's not look for the entry models and then hope you find a draw on liquidity. That's why many of you guys are getting the results you're getting, unfortunately. You need to understand how all these things come together. It's not something that's learned overnight. It's something you have to work with a professional to do. Again, you know, this is the highest paying industry in the world. There's no ceiling. So you best believe you're going to have to invest some time into this. And again, be mentored properly. You need somebody to walk you through this on a daily basis, who can call these targets out, who can walk it on a tight leash and explain to you day in and day out why these things are happening, why it's going to happen this way, and then teach you, give you guys a PhD level understanding as to why I'm calling these things out and what makes it effective. Imagine if I were to do this on every live stream. That's why I tell you guys, man, we'd be going on 4 or 5 hours if I was to really get into everything. So that's why it needs to be a layered understanding. Because for those of you guys that are new, I see how this could be a lot. For those of you guys that have been with me for some time, it's, man, Dylan, I don't want you to stop. Keep it going, man. This is sweet. Because again, it's a layered understanding. So looking at this here, breaker, fair value gap. I'm buying, trusting this is an intermediate term low, and we're not going to get below that. That's market structure. A lot more to market structure, but I'll give you guys a little bit here. That'll, again, get you started. This becomes an intermediate term low. Why? Because it takes stops here. So when I'm looking at market structure, I'm looking at the relationship of the intermediate term lows. Again, I have plenty of detailed teachings on this, things that will be covered in private training. But again, this is just a small sample of what's actually available to you guys in terms of precision. Intermediate term low here. So I'm studying the relationship of the intermediate term lows. What is this low here? Intermediate term low. Let me just go ahead and label this. So again, intermediate term low because it makes a lower low here and runs these stops. So we don't just look at market structure after the fact. We're anticipating it and we're reading it as we're reading the order flow. So this is an intermediate term high. If we're going to be bullish, if we're going to reprice up to here, there's something very specific this algorithm is going to do. This is real institutional market structure. In case you don't have the notepad out. Intermediate term low here. I'm going to expect each successive intermediate term low that comes after to be higher in relation to it. So this becomes an intermediate term low here. Why? Because it rebalances this inefficiency. So this becomes another intermediate term low. Let me drag that here. So the next intermediate term low for market structure, for institutional market structure, to remain bullish, that next intermediate term low is going to have to occur above it. Why? Because the relationship of the intermediate term lows need to be ascending if you're bullish. So where's the next intermediate term low? Right here. Why? This low here clears stops here and here. So once we price in an intermediate term low, what should the market do? Aggressively expand higher. What's this low here? Intermediate term low. Why? Because it takes out stops. So each time stops is taken, I'm not freaking out on this retracement here, on this retracement here, or here when I'm holding my trade, because I know what I'm looking for. I understand how this algorithm is going to stroke its paintbrush across the canvas all day and why it's going to do it. So as we're retracing here, I'm studying, okay, we just took out a low. The market should show me something. What do we get? Rally higher. So this intermediate term low, this one is higher than the previous one. This one's higher than the previous one. This one's higher than the previous one. Intermediate term highs are being what? Broken. Why is this an intermediate term high? Because it rebalances an inefficiency. So here we have an intermediate term high here. This is also an intermediate term high here and here. Why? Because this is a significant high with the swing low to each side of it. So all these are intermediate term highs. The definition of bullish market structure for the notepad. Intermediate term lows are being respected and not being challenged. And intermediate term highs are being broken. Intermediate term high here, broken. Intermediate term high here, broken. While the intermediate term lows are ascending in their relationship. So again, that's that real market structure. What the real institutions, what the market makers are actually looking at when they're pricing in market structure. And it's not something that can just be qualified after the fact. I've done this for you guys again all year. If you go back to the live streams, when I'm calling out order flow, and we were bearish for quite a few of those examples, what was I saying needed to remain intact for order flow to remain bearish? Swing highs can be swept, but they need to be what? Immediately rejected lower. So again, all this needs to be taught foundationally and over live market action. You need to be taught it in hindsight like this, but knowing this in hindsight is not going to do anything for you. You have to see somebody not just talk the talk, but walk it as well, which is what I do. Cut through all the bullshit, all the noise, right to the money-making stuff. And again, that's what we're focused on here. So gave you guys a little gem there on market structure. And the recording will be up for you guys. So intermediate term low, we're pricing higher. So as we're seeing each successive intermediate term high, I'm trusting what? That the buy side is going to be targeted, which is that 46.11. Let me go into some Fibonacci targeting because this is a good lesson to articulate how all these things come together. So I'm looking at the bodies here. So I'm looking at the body from this candle here to here of the retracement leg that sets up the true move. So again, I'm teaching this in a very specific order because it needs to be understood this way. If you just come down into the 1 minute chart, look for entry patterns, look for standard deviations, and you have no idea what the higher time frame is going to do, again, that's why many of you guys aren't seeing the success you want to see, because it's the order I'm teaching it that it needs to be learned. So once you understand the higher time frame, once you understand it's going up here, you can then use fib projections and do other things. Will you go throughout today's PM session at least 30 minutes? If you're still asking me to trade these conditions in front of you, you haven't learned anything yet. I would rewatch the video. Maybe I'll touch on a little bit of live price action, but again, you guys know what's up. You should know what's up. So again, how do these things come together? Daily bias, we're bullish. We're looking at these equal highs. Why? Because there's real orders up here. Again, what do I use for the morning session? I'm gathering intel. Where are the victims? Where's the liquidity? Here. So I'm going to look for a reason for the market to reprice into there. I'm going to buy the discount, and I'm going to pair my long exit, which is again selling. I have to sell to get out. Well, who do I want to sell to? I want to sell to people that are willing to buy at an expensive price. Who's willing to buy there? Retail Rick with his buy stop. So I'm going to offset distribute my long position. I'm going to cover my short and handshake with uninformed money's buy stops. That's what the market's doing each day, every day, all day long. Even in shitty conditions like this, it's still doing what? Sell side to buy side to sell side. It's the same thing. So there's a reason the market's running here. So now that all those things come together, I see the liquidity, I see why it's going to go there, I have a narrative. Now I can start using fib projections. So let's go ahead and put these on. So I'm ignoring all these here. Why? Because they're inside the range. I'm going to look at the next fib projection target that's above the high here. What is it? -3.5. 46.11. Man, that number sure does sound familiar. You see how it aligns with that level? You see how I got this swing high exit right there? Look at the bodies respecting that 46.11. What's this move right here? Why do we see that small little wick above that? Because like smart money that's looking to take the bulk of their exit of their long position up here, we're doing the same thing. But for that order to be filled at that level, 46.11 a sell, right? Not market replay. You know, I don't even think you can fake or game TradingView. But again, for those of you guys that have been here, there's no reason to fake it when you can actually walk the talk, right? So 46.11, we price a quarter of a point above it. I think it's a quarter of a point. It's a half. The reason we have that little coloring outside the lines is to fill the bid and the ask. Smart money has their levels here like I do to exit. So for that price target, for you to get filled at 46.11, it has to do what? Price higher. Above that to offer that fill. Asus, if you're ICT copy, you need to prove yourself, man. You ask too much money for your mentorship. Just execution screenshot is not enough. You're too young to teach like Michael does. Walk your talk. Man, there's all types of jokers. And how do you hate on me? I'm here providing free value all year long to everybody. Community, giving free value, not asking for anything in return except a like button. Or for you guys to hit the like button. So if you're hating on me, man, you really got to have a miserable life, my man. And I really do wish you the best on your journey because you're probably going to need it. If you're in here on my YouTube stream, commenting bullshit, there's people that are really here to make money and you're taken away from their learning. So if you want to go to Romper Room mentorship, if you want to, learn on somebody's YouTube channel, go do your thing, brother. But this isn't the place for your bullshit, my man. So you can just keep it moving. So there's a reason I'm using that as my exit because of how these things come together. So I'm using the bodies because the bodies is what's going to tell you the true narrative. So that's why I'm using this as my exit here. So calling the level here in Telegram beforehand, why I'm expecting that, and then trading it real time with the logic that I teach you guys. So what we do again is we have to extend the PD arrays on the other side of the curve. This is a fractal market maker buy model. Original consolidation, smart money reversal. Why? Because there's an SMT there. So this is the start of a buy program in a new market maker buy model. So what we have to do is we have to extend the PD arrays on to the other side of the curve. So if we have a bullish breaker, we extend that through. What's it going to do? Support. Old fair value gap. That would be resistance if we're in a sell program, but we're in what? We're in a buy program. So we do it. We extend it through. It's not an accident that we're finding support there at that consequent encroachment perfectly. Rally. And then you can do that with all these other PD arrays here. But again, I'm not going to go too much into this because again, we'd be here all day. But that's enough to get you guys started, take you right into the charts, understand how to do top-down analysis, how do you read order flow, how to use fib projections, and how all these things come together. If you're new, I understand how it could be a lot. There's a lot of things to be considered. And again, you're stepping into the most difficult industry in the world with very sharp, very conniving people that run this business. And you also have to be sharp and on point as well. So it's not going to be easy. I never said it was. It's going to be a lot of work. But again, the precision speaks for itself. And if you want that, obviously you're going to have to work a little for it. So I'll go ahead and take some questions now. I know I've been teaching quite a bit, but there's some things I wanted to articulate. And again, just show you guys why it is that I've been looking for those things. And then again, here we see that volume imbalance reprice right up to that midpoint, which is again that target there that I was sharing that the algorithm would want to reprice into for a very specific reason because there's an efficiency there. So let me go and take a few questions and then we're gonna go ahead and keep it rolling. So I touched on a lot of points today. Manuel, sir, what did you mean by market structure break instead of market structure shift? A break in market structure is more significant. So it's more indicative of a general change in tide, whereas a market structure shift could just be like an intraday shift in structure, but not really anything significant on a higher term. So there's a distinction between market structure shift and break. I have covered that before, but I know we have quite a few new people here, so I'll reiterate those things. Benjamin, when can I sign up for Signal Service? And is it live trading or just analysis? Yeah, so the live trading room or a Signal Service, that will just be trading. No teaching, just the money making stuff. going into the markets, sharing what I'd be looking for in that day in terms of setups, executing it in front of you, managing the trade from beginning to end before we close out. But no teaching, just calling targets. Basically what I do, really not like the live streams, because actually the live streams I did this past year had a lot of teaching elements intertwined in it. But when I'm trading, I'm locked in. I'm not taking questions. I'm not worrying about anything else except what these candlesticks are telling me, and our signal service will give you access to those things. Mr. Solomon, Dylan, where is Denisha? I actually just had a conversation yesterday with Denisha. She's doing well. I guess not here today. Islam, I'm not sure if you saw my question before, but can you please provide your fib settings? Yeah, I have different templates for fibs. So this is, you can go and screenshot that. This will be recorded for you guys. This is what I use for fib projections. I just go to about -10. I have one for inefficiency in quadrants. So I look at, or whenever I'm grading a price swing, I grade a price swing with the quadrants. I use those things when I'm using implied dealing ranges. Tons of tools, but you can also use this for inefficiencies as well and get those quadrant levels. So this is for quadrants and grading price swings. And then just the standard premium discount to give me that equilibrium measurement. So yeah, those are the three most important ones that I use for fib settings. Could you please mention briefly how to internalize opening range gap and how it aids in your daily bias after opening range? So opening range gap, there's a lot of things that need to be considered there. Again, that would be a whole nother teaching in and of itself, and I'd probably be here another hour and a half. But something to get you started in the right direction. It's just basic gap theory. If we're bullish and we have a regular trading hours gap above us, it's going to do what? Go above it, use it as support. If we're bearish, we get below it, we're going to use it as like resistance, like a ceiling, like here, for example. Let's say we open with a gap lower and we're bearish and we hit that. If we're bearish, gap theory is going to mean what? It's going to hit it, act as resistance, send it lower. So that should give you a down and dirty way to look at gaps, but there is other things to be considered and a lot of different things that communicates to you. But again, that's a pretty dense subject matter that needs to be taught throughout several examples. Denisha getting over the flu, but I'm here in the background. Glad to have you, Denisha, and I wish you a speedy recovery. All right, there were some questions in the beginning. Jonathan, I did not forget about your question, my man. Go ahead and take that off here. So when asking about the look back, why May 1st and not April 1st? Quarter begins April, June. Right, Jonathan, but the way I'm calibrating the look back specifically is I'm going to when the quarterly shift occurred, and then I'm going to the first calendar day of that month to look back and cast forward. That's the way that I use it. That's the way that works for me. There are other people that have different interpretations, and you know, if it works for you, it works for you. But how I look at it is that is specific, and it's something that's systematic. So I know it's going to consistently produce me, or provide me, excuse me, the results that I'm looking for because it is something that's systematic. So I go to the first day that the market structure, that the quarterly shift occurred on that calendar month. So hopefully that covers your question, Jonathan. But if not, we'll cover this in detail when we get to work next year, my man. May 1st. Hold on, Jonathan, hold on now. Let me make sure I understand your question right. May 1st. It's May 1st to the high is not 60 days, but it's 90 days. No, it's 60 bars, brother. Oh, days. Okay, gotcha. So when you are doing the data range, that's something I meant to cover as well. Whenever we're looking at days, we're looking at market days. The algorithm doesn't like compute weekends. It's just sequencing the days it's printing candles. So we do a 60-day rolling look back and cast forward of specific market days. So it has to be trading days. That's why we specifically look at the calendar days that the market's trading. I could see how you got 90 days now, but it's actually 60 trading days that I'd be looking at. So hopefully that covers your question there, Jonathan. But again, if you need more clarification, you'll have it more than clear once we get to work next year, man. Ahmed, wow, beautifully explained, Dylan. If the data's range is much more clear. Definitely, Ahmed, I appreciate it. And like I said, it was really convoluted when I first learned it from ICT through different teachings. And I had other people also teach it to me and learned it from them. And the way I use it is experience. It's not the way I was exactly taught it by different mentors, but it is the way I use it and it gives me success, which again, what everyone's here to learn, which is how I'm doing what I'm doing, why I'm able to call these things all year long, track record that's there. And again, it can be verified. And I'm just showing you guys behind the curtains what it is I'm doing little by little so you guys can see that it's a lot more than what may meet the eye. Tobino, I think that's a cheat code. Yeah, it sure is. It sure is. Michael, you trade gold bot levels with SMC. Awesome. If you're finding success with it and it's giving you results, best of luck. Best of luck. Why not willing to teach the public? What am I doing today? All right, fib settings, covered that. Ultra chilled music, would you trade on Fed policy day? Yeah, that's something. Yeah, you can do that. But again, you just have to know what you're doing. Will your Signal service subscription be live trading or just analysis breakdown? Yeah, no analysis. Signals is not for learning. It's for people that just want to take my trades and look to profit off what it is that I'm making available in terms of trading. There's not going to be any education in that. Again, the education, if you want to learn, that'll be in private training, not in Signals. Signals is for people that want to earn. Mentorship is for people that want to learn and eventually do it themselves. So just to clarify that. Tupac, how can you identify an intermediate term low? I covered it. It's in this video. Again, there's two things. You can look back through it, and that'll be there. Joe Mahadeo, I'm ready, bro. I'm ready as well, brother. Looking forward to getting to work. The HT Master, can you show inversion fair value gaps? Yeah, showed inversion fair value gaps really the entire year. It's all there in the library for your edification. And what's really cool is we don't just talk about inversion fair value gaps after the fact. I've called several on daily, weekly charts, but even on 1 minute charts before they happened. And again, I'm giving you guys that insight that tells me when we're going to use these things as support before we even use them as support. Lail, has to be proper context though, otherwise it's useless. Exactly. Just like all these concepts. You can learn a model, you can learn 2022, you can learn an order block, but your order blocks aren't going to work unless this is behind them. Rohit, thoughts for 2024, quarter one, quarter two? It's going to be monster. It's going to be monster. We had a pretty consolidated year on dollar indices, not a lot of range expansion if you look at like a 3-month, 6-month chart. So I'm expecting this year, we got an election year. Man, there's going to be plenty of opportunity and plenty of things to take advantage of. So I'm already licking my chops here ahead of next year. There's going to be plenty of opportunity and I'm stoked. Tupac, how can I know which liquidity will get swept? Very good question. And that's really the root of what I covered today. How to know what highs that's going to go to, why it's going to go to those highs, but more importantly, why I'm able to trust it. Ahmed, thank you for this session. It really helps. All the best. Thanks, my man. Ahmed, how about you go through all of these live sessions? It's a gold mine. I improved my profitability because of Dora. Awesome, Ahmed. Really appreciate that, brother. And, I think one of the reasons we do have a lot of successful students, everyone I have trained and worked with has become a successful, profitable trader, is because I'm not just focusing on what's hot or silver bullets or 2022 model. I'm going to teach you why that stuff works. Because again, your entry patterns, if you're just trading patterns with this, you might as well, just be trading retail indicators, support and resistance, and all that stuff that clearly works great here, right? The resistance. I got to take my jab at retail every once in a while because I was there. But all jokes aside, one of the biggest things, again, that will be influential in your success in trading is your mindset. And that's one of the biggest things I focus on when I'm coaching, when I'm training clients. That's why I produce successful traders, because I focus on mentality, how to have the right mindset, how to even approach these charts the correct way, and most importantly, obviously, where the opportunities are and how to identify them. Ahmed, he's been calling the market to the T for the past year. Yeah. And there's always some jokers though, and that's the thing about social media is there's a lot of internet tough guys. They're miserable in their own life. They're not making money. They can't do anything in trading. So it kind of makes them feel better to go into other people's community where they are finding success, where they are helping people, and just projecting their misery basically. So wish that dude the best, and hopefully he can get it together. Silk Touch Trading, this information is priceless. Awesome. Thank you very much. Really appreciate what you're doing. Lots of value in your YouTube. Thank you for doing this for us. Awesome. Roddy, man, I'm new here, new sub. Awesome, Roddy. Glad to have you, and welcome to the winner, sir. Roddy, we used to have weekend outlooks, and every move was pre-called on Sunday. Amazing precision. I learned a lot. Awesome, Ahmed. Yeah. And we'll get back to that next year. Once we get into January, I'll be in here live streaming every Sunday, giving you guys my opinion, what I'm looking for, why, and we'll do it all over again next year. Cobra, are signals going to be sell and buy calls, or reasoning behind it as well? I'm going to share what I'm looking for and tip my hand and indicate to you guys what it is I'm looking for. But the why behind it, that's outside the scope of signals. Again, signals is just to have access to myself and my team of trained analyst setups who are all funded, who are all making money, and all getting paid out. So you're going to have access to that. But the education part, that's something completely different from the live trading room. By default, you may get a little experience watching me navigate the market, but again, the real learning, the real why behind it, the real why behind why I look at these setups, again, needs to be learned in a controlled setting like today, for example. Jonathan from ES. Jonathan, did that cover your question? I'm scrolling down and trying to see it as I'm saying. Did I cover your question, Jonathan? I think I did, but just double check with me there. Miss Ray, it's weird having a session without you. Denisha, I hope you get well soon, and Dylan, enjoy your holidays. Thanks, Miss Ray. Really appreciate that, and definitely used to Denisha here all the time, supporting. Absolutely. Lil Ziggy, do you come live every day? No, I do not. Next year, obviously, I'll be obligated to students and signals, and then obviously I will be given action every day, but not right now. This isn't anything I'm terribly interested in. And actually, with that, I'll take a few more questions. Okay, let me go and touch on a few points here. Let's look at yesterday's trading. So look at the delivery here on a 15-minute chart. Again, I'm calling these levels. I'm telling you where it's going, which means, again, I have the visibility to see that, which, again, we've had our attention here above this buy side. Remember, I took our attention to this inefficiency. So I can see we're expanding higher. I see the order flow is bullish. This market's going higher, all right? But look at the delivery. This is the New York AM session right here. Look at how we trade higher all the way. It'll be cleaner on a 5-minute chart. It'll be more easy to articulate. Look at the delivery. That's what I want to emphasize with you guys. So we take out the low, we leave equal lows here, trade up all the way back down, all the way up, all the way back down, up, down, up, down, up, all the way back down, up, down, up, down, up, down, sideways consolidation, up, down, consolidating. I don't like to trade this. Again, I can get the direction right, but your drawn liquidity doesn't matter if it's a high resistance market profile. So if I know, I'm more likely to be stopped out, and that's not a weakness, that's a strength, being able to recognize that. If I were to trade in here, if I were to live stream in here with you guys, again, it wouldn't be the same precision you guys are used to from us here at Adora Trading. There's a reason for that, and again, that's what I'm sharing here. If I was to trade here, is my direction right? Are we expanding higher on that daily chart? Absolutely. But again, it doesn't mean nothing if you get stopped out in the delivery of price, which is why I'm saying that I can see this big bright orange box up here. Let me go ahead and zoom out. I can see the bright orange box. I can see that's what it's reaching for, but I don't need to trade it. And again, that's the difference in a professionally minded trader and somebody that just needs that next trade to feel better. I'm executing when it's smart to do so. I'm training my students to execute when it's smart to do so. And we can just let the retail get chopped up in all that nonsense because they don't know how to anticipate it. They're just going in here blind every day, and we are absolutely not doing that. Sal, just finished work, and we'll see you live. Missed the show, but we'll replay. There's a lot of good things in here for you, Sal. It'll really pull some things together that we've been working on these past few months and really solidify that higher time frame analysis. And if you have any questions, just reach out to me in our channel, my man. Richard, what's your risk per trade on ES, MES, and the stop loss parameters? That's a good question, Richard. It really depends. For example, the trade I took on Friday, that's going to be a low risk trade. I'm not going up over 6 contracts. That's really the max. I won't go up into 10 contracts and risk my highest leverage because it's lower probability conditions. So sometimes I risk 0.5%. Sometimes I risk 1%. Sometimes I risk 1.5%. What constitutes what I risk per trade? All these factors. Am I trading in line with higher time frame institutional order flow? I can still trade short even when we're bullish, but I have to do it with less leverage and be more selective with those setups. But if it's with higher time frame order flow, if I'm in line with institutional order flow, again, top down, if my daily bias is bullish, if I have weekly targets I can see, and I'm buying, that'll be a higher leverage trade than something that's going to be counter trend. So again, those are all things you just learn with experience. But that's how I determine the risk per trade. I have to look at what I'm looking for, what setup am I looking to take, and then that'll tell me, based off my protocol, what it is I should be doing. Lil Ziggy, do you use market correlations? I'm not sure what you mean by that. Like intermarket analysis? If that's the question, if I understand you correctly, absolutely. And again, there's a whole year of me calling these markets, using intermarket analysis, qualifying these things. And again, the results kind of speak for themselves. So you'll be able to refer to that if you want to see more about intermarket analysis. Again, every Sunday, I did this last year, and you guys have it to look forward to every Sunday next year as well. Caleb, most people must not have been taking notes. Most of the questions being asked were covered in the stream. LOL. Yeah, it's just how it is, Caleb. Everyone has their selective hearing. I will trade. How often do you do live streams? Before we entered the holiday season, when markets look like this, before we entered, I was doing them really 3 times a week. I do one on Sunday every week, telling you guys the bias, but also do a couple here and there during the week when I got done with my trading. And that was really the schedule for live streaming. But now I'm not doing as much again because of this right here. I'm just not interested in it. Silk Touch Trading, just grateful you are around teaching this for free. Insane. Appreciate it. I appreciate it. Emmanuel, so basically, the quarterly shifts help to determine the bias. It tells me where that daily chart is going, why it's going there, and when it's going to deliver. So those 3 things is what if the data ranges tell me. It also gives me a why, understanding that there's fund level liquidity there. There's a reason it's going to want to target those stops, and then all those things kind of come together. And again, that's what gives me the precision that I've been showing you guys here. Asus, don't take that. Oh, that's the same Joker. I didn't insult you. Why so angry? Nobody's angry, brother. We're all here just taking it easy. Show my broker statements. Man, and the audacities people have, and that's one of the big things that why I understand why ICT is leaving social media, because there's just so many people with a entitlement mindset that think that just because I'm here, I owe them everything. And again, if you have that entitlement mindset, you're probably not going to cut it in trading. So it's just good to recognize that early on. You'll probably save yourself a lot of time and money. You got to be a different-minded person, not weak-minded, if you want to find success here. So if you want to find excuses, you're going to find excuses. If you want to find success, you'll find success, and you guys know where to go. Awesome, Jonathan. Glad I was able to cover that for you, brother. And the thing about broker statements and all those things can be faked. Broker statements, executions, but what can't be faked, coming out here, calling these markets every week, why they should do it, why they're going to deliver, and showing results. That can't be faked. I can't go into the future. I can't insider trade. That's the only thing that can't be faked. Calling a market real time, minute by minute, showing you how this shit really works. So that's the most proof I can give. And if that's not enough for you, then you're going to have to shove that where the sun doesn't shine. All right, on to the next thing. So what's your targets for today and this week? Oh, Kevin. My targets are hit, brother. So again, I called that out on Telegram. Again, we've been calling this move higher, calling it to these levels here. And we just got a nice move that delivered. If you take a look at NASDAQ, we just reached the external range liquidity here. So, I mean, could we go higher? Yes, that's what I suspect based off what we're seeing, as long as we remain above here. But it's nothing I want to trade. I don't want to buy here, but I also don't really want to sell short. So we just called the monster move. Targets are hit. Just let the market show its hand. That's how I'd go about it. Sal Wartsy, thanks, G. Absolutely, brother. Richard, got it. Awesome, my man. Geese, hi, Dylan. I sent you an email inquiry. Could you please kindly take a moment to review it and provide your response? Thanks a lot, man. Yeah, Geese, I'll have my my associates look at the email and let me know what we got there for sure. Carla, all tuned in late, but sure, Dylan dropping gems. Yeah, there's a few good things in here. A few good things. You might be able to find some a little bit of value, but the recording will be up for your edification, Carla, for sure. Tanya Trades. I said that right, I think. Good afternoon. Do you only trade ES or do you dabble in NQ as well? Good question. I do trade both. It really depends on which one is the relative strength leader or the relative weakness leader. So there's certain parameters that I look for to know which one I'm going to trade. As an example, when we were looking at the bull run here in the beginning of the year, NASDAQ was the strength leader. And just to articulate why, ES was strong. ES was still rallying, but it took this high here. Whereas NQ, it had equal highs. So because NQ was looking to reach for something, it had a target that I could visually see it's wanting to reprice above. I'm going to elect to trade the NASDAQ because it's going to give me more bang for my buck because I know why it's running to those levels. When I was short, when we were looking at shorts the entire last quarter, well, not last quarter, last 3 to 4 months, I was focused on ES because ES was clearly the weaker one. And then that's Dow. Dow just have a mind of its own. But the reason I elected to trade ES here was because it was decisively weaker. And I could see it was running to these lows here, whereas NQ was much stronger on the down move. So that's how I typically determine from a weekly daily chart which one I want to trade and why. So there's a little bit of a protocol and a procedure I have to determine which one because it's important. It's important. And if we actually go to ES, an actual good point on that. This trade I took on Friday. ES rallied and took out this high here. But if you look at NQ, on that same Friday, it was much more lethargic on the up move. And I don't even think it booked that high. Yeah, it did slightly. But ES was a much better long on that day because it was reaching for those equal highs. Whereas if you look at the daily chart, NASDAQ had already priced above these highs here. So I was looking at ES more as like a six sister thing on this type of day. So there's different parameters. There's different situations that would cause me to trade one or the other. Emmanuel, appreciate you. Awesome. Alex, can we still join your mentorship? Yeah, we do have. I think we have a few spots open. I have to get to back with my associates and see how many spots we have left. I think it's probably going to close it soon, just because we just want to keep the quality of it as a priority and not the quantity. But I think there still should be some spots for you to get in there, Alex, for sure. Prince, the 60-day range on NQ has been traded to. Where are we likely to go from here? That's a great question. So basically exactly what I've already covered. These quarterly shift targets have been hit. I gave you guys the look back, why we're repricing above these highs. And now that we have, gun to my head on NQ, just so I can leave you guys with something over the holiday while I'm not personally going to be trading much. We booked this high here. Look at this up move. Look at all the inefficiency that's left open. So this is a market that's indicating it's reaching higher. It's not even repricing down into the inefficiencies. This to me is a bullish market. So as long as we remain above this swing low in here, I would suspect we're gonna look to rally into this inefficiency. And then I want to see how we trade there. Do we hit it and reject the lower portion? Or do we get above it, use it as support, and then run for all-time highs here? Tipping my hand to you guys, personally, I'm favoring all-time highs. But again, because of the time of year, because I'm not really doing too much with dollar and bonds right now, I don't really have intermarket qualification behind this setup. So again, it's nothing I would bet the farm on. But just a gun to my head type of thing, that's what I'd be looking for. And then if we look at ES, we have equal highs here and here. So that buy side is of interest to me. So that's what I'll be looking for on stock indices moving forward. AB, Sal, show me the cash live. AB, ignore that noise, Dylan. Poor guy needs to move along with that bull. Yeah, there's just a lot of people. It's the internet. It's the internet. So what can you do? What can you do? Olawale, you know ICT isn't going anywhere. Did a live stream yesterday, probably 2024, mentorship episode 1. Yeah, who knows with ICT? Man's got a mind of his own, but grateful for everything he's made public to us. Olawale, I appreciate the session, Dylan. Absolutely, brother. All right, so I think we're going to go ahead and wind this down unless I get a few more questions here, but just wanted to hang out over the holiday, let you guys know we're still doing good. Algorithm's still working smoothly, and got a whole nother year of opportunities coming up. Tanya, yes, you said it right. Okay, awesome. Kieran, Tanya's here, first time, and I'm loving it. Awesome. Love to see the community growing and that we're able to provide value to more people. All right, guys, so that's going to be it for me. Thoughts on EU? Yeah, let me go ahead and leave the Forex crew off with some insight. So looking at the weekly chart here for NQ, this is what we left off with when I finished my trading around here. So what I told you guys, we'd have to monitor how we trade in this fair value gap and breaker. Let me go and take this off. And I said if we were going to remain bullish, the market would have to get above this fair value gap and breaker and then make a run for this inefficiency of these equal highs. We did not. We actually created a swing high on the daily chart inside of a key premium level. So a swing high being formed at a fair value gap and breaker. Again, I'm not going to do all this for you guys, but if you look at the data ranges, there's a reason we're seeing a shift here, lower, and why it's repricing to this liquidity. Do what I taught you guys with the look back and the cast forward, and you guys will see why we're hitting these levels here at this specific time. It's doing it on all assets. So if you guys look at that, you guys will see why we saw this rotation lower, why it targeted those specific lows, and that's what I'm looking at here for dollar. So we got a nice breakdown here on dollar. Intermediate term low broken, so that's a market structure break. Trade up into the breaker, sell off. Aggressive displacement lower. Inefficiency here. Not even filled in. Institution order flow entry drill. Why is it institution order flow entry drill? I taught this before, but I'll reiterate it again. Because on the other side of the curve, there's an inefficiency. So when we have two inefficiencies that overlap, that's where you're going to get your institution order flow entry drill. Hit that, sell off. Again, running for the sell side below here. So what I'm monitoring in dollar, We traded down to a discount. So let's look at the dealing range we're in on a hourly chart. So this is a significant low. If we get below that, it would probably suggest that we're going much lower. Lisa, what tool did you use for the 60-day look back? So you hold down shift and you click, and then it'll give you like a toolbar that'll show you like a date range. And that's what I use to see, like, for example, 20 bars back. And so that's the tool. So it's just shift and click. So again, back to what I was saying. So look at the dealing range that we're trading in here for dollar. We reached a discount. We traded into this bullish breaker and cleared the stops here. So this really would have been the move for the quarterly shift I would have been looking for. Right now, I'll just be waiting for more information, seeing how we trade here. We traded down into a discount, and now we're pulling back up into this weekly fair value gap. So you'd want to have that on your charts, monitor how we trade there, because that'll be influential as we move forward. If we reject, you guys know, again, you guys know the protocol. We did it all year. How do you trade at the midpoint? If we reject there and we're unable to get to the premium end, that indicates it's probably a bearish market. If we start to close above it, if we start making ground above consequent encroachment, closing above, then using it as support, then we're likely going to run higher. Tipping my hand to you guys longer term, going into next year. Again, I'll have to weigh this out with the bond market, with yields, again, to qualify all these things. But I would submit to you guys that we're probably not done above these highs here and here, and this inefficiency. But again, just a little sneak peek into next year. Nothing I would, again, bet the farm on, especially at this time of year. Joe, when will the schedule be available? Yeah, for those of you guys that have already signed up for private training, I will get that email out to you guys by this week to get you guys into the private Discord, into the private community. And then you guys will have all the details on how to get ready for January 1st and what it is you should be doing in anticipation. So all that will be covered, Joe. Thanks for your question. Ralph Rogers, thank you, man. Yuda Shadow was here. All right, so I think that's just about all the questions. All right, you guys. Well, I'm going to go ahead and wrap it up here. I believe I covered everything that I wanted to touch on today. So it was good talking to you guys. Good to get back on here and chat with the old community. Again, look forward to doing this for you guys next year, and we'll get back to business. So I'm trying to remember the exact date that I'll be back. So looking at January, the second week of January, so January 7th. So mark it in your calendar, folks. We'll be back January 7th. So January 7th is when I'll start the first live stream of 2024. Give you guys clarity on what targets we're looking for and what we'll be expecting, and it'll be just lovely as always. So, all right, everyone, take care. I appreciate you all joining us. I hope you guys have a great rest of your holiday season. Rest up, take it easy, and try not to bleed out too much capital in these conditions. Obviously, unless you're a professional. That's always the caveat, and you have experience. But with that, everyone, I do wish you a good holiday. Take care. Thank you guys for joining us. Really appreciate the attendance by all of you guys, growing the community little by little, and very grateful for that. So don't forget to hit that like button if you got value, if this helped you out. Help your man out here and give me more incentive to do this for you guys more often. So hope you guys have a good rest of your holiday season. Take care and stay safe.